Hello, my fellow investors, and welcome back to another earnings report video. Today, guys, let's take a look at the company Air Canada. Now, they just had earnings on Friday, and I'm like, you know what? Chad has been asking us, and honestly, I think we should just do this as well, that we should do a lot more Canadian companies. So, I mean, I think that this is a Canadian company. I don't know. I'm just guessing. But let's take a look at this company, guys. Let's take a look at their earnings. Then let's take a look at their fundamentals, and then let's see if using discounted free cash flow we could come up with a price for this company, because well, airlines, I mean, in the US, airlines got destroyed during COVID and they have still yet to recover. So I don't necessarily know if Canada was this way. I would assume so. I know Canada was locked down way longer than the United States. So yeah, that one is that might be a little bit tough when it comes to these earnings. So with that said, let's get started with this video. So here we have their earnings summary as of August 11th, 2023. EPS normalized actual came in at $1.38, beat by 85 cents. EPS gap actual $1.75, beats by $1.09. Revenue actual $4.04 billion, which was a beat by $188.32 million. So a beat on all fronts. Now on Friday, this thing actually gained 3.2%. So that's really, really good. However, man, their earnings aren't... The earnings are good, but that guidance, they lowered it a little bit. So let's jump into this right now. And like always, this will be linked in the description below for everybody to read, which is highly suggested. So I'm only going to cover, guys, my videos have been getting really long. So I'm going to dial it down to like between 15 to 20 minutes. So I'm only going to cover from now on just the highlights as well as the CEO comment, and then if there's any guidances, right? That's really it. So looking at the report, we got over here operating revenues of 5.427. This is, by the way, in Canadian dollars. So, you know, just remember that whatever we see in Seeking Alpha, it'll be in US dollars, right? So just keep that in mind. Operating revenues of $5.427 billion, increased by 36%. Why do they put percent? Two separate. Okay. Operating income $802 million with an operating margin of 14.8% compared to the operating loss of $253 million in the second quarter. Wow, that's really insane right there. They just went from an operating income loss of 253 to a positive 802 million. Adjusted EBITDA of $1.22 billion with adjusted EBITDA margins of 22.5%, an improvement over $1 billion from the second quarter of 2022. Second quarter net cash flows operating activities was $1.49 billion and free cash flow was $965 million. All right, leverage ratio of 1.7 at June 30th, down 3.2%. You know, all of this is looking really, really good. Let's take a look at now what the CEO had to say about this. We got Air Canada second quarter results were driven by strong demand and show the effectiveness of our plan as a result of our hard work of our people, the appeal of our growing global network, as well as our leading brand and product offering. Operating revenues in the quarter reached $5.4 billion, an increase of 36% from a year ago. Operating income $802 million, a year-over-year improvement of over $1 billion, which I'm looking at this, I'm just like, that wasn't a bit. Okay, it's $1 billion, taking into account also the negative 200 whatever million, right? So yeah, it's about $1 billion. And our adjusted EBITDA reaches $1.2 billion with an adjusted EBITDA margin of 22.5%, said Michael Rizzo, oh boy, president and CEO. All right, now we got more stuff over here. I'm not gonna read all of this, and here we got the highlights, which we just read up there. Guys, I want to take a look at this outlook because there's usually whether the company moves up or down right here. So we got full year guidance for 2023 before. So this is into the ASM capacity. I don't necessarily know what ASM means, but you know, maybe if you guys know, please tell me in the comment section below. But we got over here prior 2023 guidance, we got about 23% increase versus 2022, and now it's revised to 21%. Adjusted CASM, I don't know what that is either. Again, tell me in the comment section below. About 0.5 to 2.5% below 2022 levels, and now you can see that it got revised. The upper percentile got revised down from 2.5 down to 1.5, and adjusted EBITDA 3.5 to 4 billion, and you can see that the lower percentile actually got risen up by 1.25. So now it's 3.75 billion to $4 billion. All right. All of that is looking really, really good. And here we got major assumptions. Air Canada made assumptions in its preparing its updated guidance and making forward-looking statements, including moderate Canadian GDP growth for 2023, that the Canadian dollar will trade at an average at $1.34 per US dollar for the full year of 2023, and the price of jet fuel will average at around $1.08 per liter for the full year of 2023. All right. Again, guys, you guys can take a look at this further on for yourselves. And yeah, let's take a look at now the discounted free cash flow. All right, so here we go. Now, starting off the back, guys, I'm gonna have to say something. Discounted free cash flow doesn't work, and I just took a look at the book values, and that doesn't fare any better either. So I'm looking at this, and I'm just like, this is a company I would like to stay far, far away from, right? Far, far away. So we got the ticker for ACDVF. That's a ticker. Market cap of $8.46 billion, a PE of NA. That's not surprising. With a current share price of $17.51. Now, if we take a look at this graph, this thing is up 19.33% on the 1 year. On the year to date, though, this thing is up a whopping 25.05%. Now, if you guys want to see how this thing was affected by COVID, well, here it is. Look at that, from a price of $40, right, in January of 2020 to then the low point of $8.80 as of March 20th, 2020, and you can see that it has not recovered ever since. So yeah, this thing got hit massively. So right then and there, where it's going to be very, very difficult to analyze, right? So looking at this further, they don't pay the dividend. Now, this free cash flow, look at this. The 5-year is a negative 129. As of the last year's free cash flow is a positive 588. So, yeah, these graphs are going to look very, very interesting. Starting, of course, with now the net income, we got the 5 years ago of $27.1 billion to a 1 year ago of a negative $1.255 billion. Guys, that is a decrease of 4,733%. The lowest point was, of course, 3 years ago, but you can see as of 3 years ago, this thing has been decently increasing. I gotta say, I have no idea where this is going. Well, to be fair, I guess the earnings did say that the operating income is increasing. So I'm gonna take a look at this, guys, and I'm gonna give them slightly higher. I would say like a 55%. Looking out into the free cash flow, this thing is similar to that of the net income. We got 5 years ago of $757.6 million to 1 year ago of $588 million. That is a decrease of 22% with an average of negative $129 million. Again, lowest point was 3 years ago. That's perfectly fine, and you can see that they actually have been increasing it to now the positive. So I'm gonna have to give this, I would say, like a 70%. When it comes into the revenue, got 5 years ago of $13.2 billion to 1 year ago of $12.23 billion. That isn't a decrease of almost 7.3%. 3 years ago, obviously crushed it, and crushed it in the sense of like it went down, right? And you can see 5.4 increasing, came down, and then they've recovered as of last year. So this actually isn't looking too bad. My one issue is that 1 year ago did not come back to the mean. So I'm gonna have to give this, I would say, around like a 50%. And looking at the assets minus the liabilities, this is just bad, right? This is just bad. 3 years ago, they were still in the positive, but actually, as of 2 years ago, they were still in the positive. But as of 1 year ago is when they came into the negative. That's concerning. And, well, they are bringing it up, but man, I have no idea where this is going. I really, really don't. The trend, it is to come down, not necessarily to go up. Average total assets is $22.67 billion. Average liabilities is $22.04 billion. Doing the difference, we get a positive $631 million. I'm gonna have to say, guys, I would say around like a 35%. And looking now at the cash flow minus the liabilities, yeah, this is just consistently decreasing. Now, they had 1 year from 2 years ago to 1 year ago where they did increase it, but still, though, the overall trend is to come down, right? Especially since clearly that assets minus liabilities is going down. So I'm looking at this, I'm just like, yeah, not good at all, right? Not good at all. So looking at this, as of 1 year ago, we can see that it is negative $22.4 billion, and the average being negative $20.2 billion. Overall, guys, I'm gonna have to give this, I'm gonna say around like a 20%. When it comes to the shares outstanding, now they piled on a ton of shares starting 3 years ago and then continued to increase it. But you can see that from 5 years ago of $270.7 million to today of 358.5 million shares. I know I just said dollars, my bad, shares. Guys, that is an increase of 32.43%. previous year to the current year, so looking at 1 year ago, 358.4 to 358.5 is an increase of 0.03. Now, the thing with this is that they were buying back shares from 5 to 4, then they increased during COVID, and then continued to increase it. So, I don't know. I don't know if they'll continue to buy back shares, because I'm looking at this cash flow and I'm just like, this is massively, right? This is, well, I wouldn't say massive, but they are going back into the, well, okay, I'm going to take that back. They are going back into the positive. So I'm looking at that and I'm just like, okay, they could start buying back shares, but I think they might continue to issue it though for a decent amount of time. So I'm going to have to say, oh man, I'm going to have to say, I don't know, 25%. I guess. And when it comes to the cash equivalents, they currently hold 2.21 billion with an average of $2 billion. Overall grade, we gave this thing a 55 for the net income, free cash flow 70, revenue 50, assets minus liabilities 35, cash flow minus liabilities 20, interest at 25, overall grade of 48%. Yeah, I don't necessarily know where this is going. That's pretty much the gist of this company. Now, if we take a look at the discounted free cash flow, guys, this is where I'm just like, I don't know where to value this company. I just don't. Like, I really just don't. As you can see, not inputting anything, we got a target share price, not adjusting for debt, of $334, and adjusting for debt, $327. So, I'm looking at this, I'm like, any number I put, we're going to get higher, right? Even if we were to put in like a negative value when it comes to like a negative 40 for like the share buyback, guys, it's still $200. I'm looking at this, I'm like, I don't know. The reason why is because, well, the shares outstanding just isn't that big, but I think it also has to do with the fact that there's just massive amount of movements right here, right? So that's probably is what, I mean, just look at this, from 4 to 3 years ago, that's almost opposite of one another. So I'm looking at this, I'm just like, I don't think I'm going to be able to do a good analysis when it comes to this kind of free cash flow approach. So if we were to take a look at now the book value per share, well, unfortunately, this isn't giving me anything either, because, well, the current book value per share is a negative $1.22. So that's, I don't know what else to put it at. And then if we take a look at the tangible book value, this is even worse, negative $10.35. So when it comes to this company, guys, I just don't know. I literally just don't know. Now we can input some of these numbers. I was going to put something along the lines of like negative 40, negative 38, and let's just say negative 36. And I don't know, for the revenue, you can see here that Seeking Alpha is estimated at 49.6%. So if I put in anything close to that, this thing's gonna go to like $1,000, right? So I don't know. Now I was going to, I guess we could put in something along the line. I don't think the revenue is going to decrease though. That's the thing. I think the revenue will continue to go up, but if I were to do anything along the lines of like 1, 2, and 3%, well, this is still a massive amount. So I'm looking at this and I'm just like, this company, to me, I can't evaluate it. I just can't. And there are going to be companies out there that this is going to happen, right? You just can't evaluate because, well, their fundamentals just all over the place. In this kind of scenario, book value would be the best, but then book value is telling us negatives. I don't know. I really just don't know. This is a case that I would suggest go into their earnings report, go into their 10Ks, and I guess read more, right? Read more, and then you make that decision for yourself. But this is not one that I could do from a fundamental perspective. Maybe a technical analysis perspective would be much better, right? Would be much better. But from this, guys, I'm sorry, but I don't know. I just don't know. But please remember that, of course, this is not financial advice and that every investment is the present value of all future cash flow. Have these calculators for free, even though it doesn't work for this company. Maybe it'll work for other types of companies. In fact, it actually does work pretty well for other types of companies, even though they may not be in the United States. So they're all available for free. Again, guys, the only thing we ask in return is just like, subscribe, comment. Thank you all so much for the support here on YouTube as well as Rumble. Guys, I would love to get to Rumble to 200 subs by the end of the year. That would be crazy. And on YouTube, let's try to get to 3,000 by September 3rd. Because if we do that, then Mike will begin doing face cam. So yeah, again, that's really all we're asking for. Just something free in return from you guys. About 2 seconds, 5 seconds of your time. Like, subscribe, comment, and of course, share if you do like this kind of content. And if we take a look at now the options chains, this is going to be a quick one because there's no option chains when it comes to this one. So that pretty much does it for that. All in all, Air Canada. I guess the airlines are a great opportunity right now. Obviously, I don't think the airline industry will disappear, right? but we'll understand that there is a lot of risk with it. So just keep that in mind. But anyways, that pretty much is for this one, everybody. Y'all can follow us on the new tech sites links in the description below. So with that said, peace out, and we'll see you all next time.